Welcome to the daily update, where I'll go over the action in the market for Friday, December 15th, and then we'll see how things look for Monday, December 18th. Man, talk about another sleepy day, especially for a quadruple witching day. We did see a real pickup in volume. That was not necessarily a surprise, but we didn't see hardly any movement in Friday's session. Prices just opened down a little bit, went up a little bit, and we stayed pretty much near the unchanged level. That can be taken as positive. If we're working off some of this extreme positive condition while going sideways, that could be a good thing. And our list is a little bit shorter. But when we look at the intermediate term, we still have a pretty long list of things. But for right now, it appears like the market is holding up. So let's go back and talk about what happened. Right at the open, we had a flat open, and prices spent the day above and below the unchanged level. And we closed virtually unchanged. We were down just a little bit, so it goes in the books as a down day. We were down 0.01% on well above average volume, but that had to do with the options expiring. And we are positive now, but we're still looking extreme positive. And the market is doing this shift now. They call that a Fed pivot, where it looks like the Fed is a little bit more friendly, even though that came under a bit of question on Friday. And so they're changing from being more restrictive with interest rates to being more loose with interest rates. And that's what the market has been anticipating for about a year and a half to 2 years already. Now it finally seems to be coming out of the Fed that is what's going to happen. And so we're shifting into kind of a new environment for the overall market. Of course, we'll keep an eye on the geopolitical events, specifically what's happening in Israel. Some comments that we can make because of the options expiration, and there was a rebalancing of the S&P 500. There's one video that I have posted on YouTube that talks about the criteria that a company has to have to be in the S&P 500, and they rebalance that. They change it around. They do the weightings a little bit different, and they're buying and selling, and so that really produces a lot of additional volume. And also the NASDAQ 100 also was doing some rebalancing. You take all of those things together, and it was an ultra high volume day. Mega caps were back to doing better in Friday's session. Didn't really help the indexes too much, but it didn't really make them go lower either. Growth stocks had a fairly good day, but they still have been lagging behind for the most part. And semiconductor stocks had another good day. So the S&P is now closed 14.6% higher than the low that we set back in October. And the NASDAQ 100 is also setting a new all-time high. Anytime we go up after setting an all-time high, that's going to create a new all-time high. We also have the Dow that's also generating new all-time highs. So, negative environment, these kinds of things would not be happening. But we are overextended. There's a little bit of exuberance going on right now. At some point, folks are going to want to take some profits, and so seeing some kind of a pullback would not necessarily be strange. Of course, we will evaluate that if that starts to happen and see, are things shifting more negative, or are we just working off more of a positive environment before we get set to go even higher after that? Then this kind of rained on the market's parade a little bit. New York Fed President Williams, who is a voter, came out and said, we think it's a little premature that we might be starting to talk about rate cuts. Well, that kind of went in opposition to what Chairperson Powell said on Wednesday. So the market wasn't really sure what to make of that. But then later, Atlanta Fed President Bostic, who will be a voter in 2024, said that he expects 2 rate cuts in 2024. Now, the report that came out after the Fed meeting looked at there's like one of these weird dot graphs, and they kind of try to figure out what the meaning is from that. And the market is kind of concluding that there could be up to 3 rate cuts in 2024. Of course, all of this can change at any time. We can just go with where we see things right now. So our short-term list, it's still pretty long. We still have a real high reading with the ADX in the short term, the 20-period exponential moving average, the Stochk RSI, Williams percent R, CCI 14 and 20, and the stochastics. Those are pretty much, anytime we go up, these get on the list very quickly. Our PMO oscillator, it's turning back up, but it is extreme. We also have the RSI based on 9 periods and the boom indicator based on 20 periods. Our intermediate term list is still kind of long with the ADX in the intermediate term, the 50-period exponential moving average. We're still pretty high with our standard deviations chart and the rate of change going back 50 periods. The Arun, the PMO studies, the Sean trend meter, the Chaikin money flow, the Chaikin oscillator, the balance of power, the CMB composite, the bullish percent index, both for the S&P and the NASDAQ 100, the RSI based on 14 periods, the percent B indicator, the boom indicator based on 50 periods, ultimate oscillator, and then the new highs, new lows study based on 10 periods for the S&P. And that takes quite a bit just to read that list off. In the long term, we still have our 150 and 200 period moving averages that are looking extreme. So I've switched this around just a little bit. The Fed might be done raising rates or even getting ready to cut rates. And the market is anticipating this. This is still speculating at this point, but there is some probability that they may start in March. Now, we get some strong economic reports that could go off the table pretty quick. It's looking a little bit more realistically that this may happen in June. But again, we just have to weigh this day in and day out and come to our conclusions. The dollar was up after it had been going down, and interest rates ended up being unchanged. Now that we're under that 4.02% level, I'm going to take that RenMac chart out because we're now down at 3.93%. We were virtually unchanged. And the fact that rates are coming down does tend to be positive for the market. We still have our 10 to the 2-year and the 10 to the 3-month yield curves, which are inverted, but that's been that way for about a year and a half. Sentiment ticked down just a little bit. We're still positive at 67, where we had been at 71. Our trend is still positive. The ADX, both in the short and intermediate term, are extreme. The green lines themselves are also above 40. I'm keeping our bias at positive since it was pretty much an unchanged day, and I'm also keeping our momentum at positive. And if you've been watching the videos for a while, I try to let the charts speak for themselves. This bias and momentum, that's more subjective. That's what I come up with, and that's really about the only opinion that I try to put into this. The reports that came out, we had the Empire State Manufacturing, that means New York. It came in a lot weaker than expected at minus 14.5. They expected it to be at 3.0. Last time it was at 9.1. Industrial production came in as expected, being up 0.2%. Last time it was down 0.9%. Capacity utilization, we're under that 80 level. When we're at 80 or above, that typically means that factories are operating at full capacity at that point. We came in at 78.8. They expected it to come in at 79.1. So that was a bit weaker than expected, where last time it was at 78.7. The S&P Global Manufacturing PMI, it came in under 50, so that's showing slight contraction. It came in at 48.2. Last time it was at 49.4. And then the services came in just a little bit above 50 at 51.3. Last time it was at 50.8. So here's some charts. This is the Empire State Manufacturing, where it did show a decline after we saw an advance in the previous month. Here is production and capacity utilization on a year-over-year basis. Production is the blue line, and it's coming right down just a little bit below zero right now on a year-over-year basis, where we're pretty much flattening out with our capacity utilization. Here's another look at capacity utilization, where it's still below this 80% level now. When the economy really gets going and shows more growth, we would expect this to go up above 80%. On a month-over-month basis, we declined last month, where we saw an advance in this month's reading. And then we're looking at the retail sales, since that was another report that came out. And this is the reading overall, and it's showing that this part of the economy is holding up quite well. Looking at the intraday chart, not much to talk about. Had a little bit lower open. We went above the unchanged level, then drifted down below the unchanged level, and then came right back up to the unchanged level going into the close. Here's the intraday chart, where it shows pretty much the same thing. The futures had been more strong or stronger in the initial overnight session and then in the pre-market session, but then they started to trail off as we got towards the open. And then they closed pretty much unchanged going into close for the weekend. We are seeing a little bit of an improvement with growth versus value, where the blue line is now above the red line. That's somewhat positive. And we saw a little bit of an improvement here with our ratio for the S&P 500, where growth did outperform value, at least in Friday's session. Here's the end-of-day charts where growth was pretty much unchanged, but it was down less than value, where for the mid caps, growth also underperformed, and it underperformed as well for the small caps. But on the end of day basis, we ticked up just a little bit with this ratio, but we have been declining overall. Even though we've been going sideways, we're still in a longer term uptrend, but we want to see this go up. That would help turn things more positive. Keeping an eye on our trend, the ADX is well above 40. I haven't seen this high of a reading in quite a long time. And the green line is even above 40 as well, even though it ticked down just a little bit. Short term, we're also getting a very high reading with the ADX. This is pretty extreme, but the green line is also extreme. However, it's still on top. So with both of these charts, we still default to positive, and we saw a huge spike up in volume in Friday's session. I dropped this down just a little bit because we're getting kind of out of line here with our average of the VIX, where we're at much lower levels right now with the VIX than what we've been showing on an average basis. And as we keep going up, we would probably continue to see the VIX go down as well. The Ulcer Index is still showing that there's not a lot of fear in the market. We tick down just a little bit with the VIX on the line chart, and see we're getting very low readings with both the line chart and the bar chart. The volatility of the VIX, it did pick up a little bit. There may have been some pre-weekend hedging that was going on. You also had a lot of positioning going on because of options expiration, but overall volatility is not really spiking up all that much. We are keeping an eye on the SKU index. This is different than the VIX, where the VIX looks at the money options. The SKU index looks at out of the money options, and we're still continuing to go up with this. We haven't spiked, at least yet. So when this does finally top out and start to come down, we don't know. Is that going to be a top? Is it going to be a bottom? Is it going to be a continuation? We have to use other charts to get some context. We are really dropping off still with this one other fear gauge that we look at. We're really seeing some improvement here. This is positive. The risk on to risk off ratio continues to go up and is actually showing more of an upward trend now. With our advanced decline line, we turned down just a little bit based on price and volume, but we're still well above the moving averages. And we're going sideways with our 5-period. When we look at our new highs, new lows, we did drop off in Friday's session, but the 10-period, it's topping out just a little bit here, but this is still looking quite healthy overall. We're not really seeing an expansion of new lows. We are no longer extreme with our advanced decline line ratio based on 19 periods. The blue line has now dropped back down, but we're still positive because we're above zero. Accumulation distribution. This is a smart money indicator. That still shows that there's buying going on, and we're getting kind of toppy now with the Chaikin money flow. This is another smart money indicator that we look at, but for right now, it's continuing to be positive. We dropped off a little bit with the cumulative advanced decline line for the NYSE, where we just ticked down just a little bit when we look at our regular advanced decline line of the NYSE study. Here's another study where we came down just a little bit, but we have been showing some real improvement lately. And we did break out, as I pointed out in yesterday's video, based on price and volume with the common stock on the NYSE, but we did pull back just a little bit in Friday's session. We're looking okay still with the advanced decline line studies for the common stock on the NYSE, the S&P, the mid caps, and the small caps, even though we saw it tick down a little bit in Friday's session. Here's the daily chart where we're still above this pivot point. So this pretty shorter term support so far is continuing to hold up. And you can see on the bottom where we saw just a massive spike in volume. We're turning down a little bit with our 20 and 50 and even our 200, but we're still extreme positive with the 20 and 50 period moving average study. We're still extreme with our boom indicator, suggesting that we're still pretty far away from the 20 period moving average and the 50 period moving average, but we're still showing some improvement with the 200-day moving average. And then we have our usual suspects, the Stochk RSI, the Williams percent R, the CCI 14 and 20 continue to be extreme positive. We're coming back down just a little bit with the force index, but we remain positive and the midpoint is continuing to advance. But when we look at our stochastics, we're extreme in the short, intermediate, and long term. We're still even up outside of the +3 standard deviations here. So we need these lines to catch up, or we might see some kind of a fallback here with price or a combination of the two. Intermediate term, we are still extreme positive with the balance of power. We're still looking positive with the go, no-go system. We dropped down just a little bit with our highest high value, but we're still pretty close to the blue line here. And we're turning back up with the TTM squeeze. This is more intermediate term and is starting to turn back a little more positive. The CMB composite, though, is still extreme positive. We're pretty much flat now with the ease of movement, but we're still above zero. And we're pretty much flattening out as well with the Arun, where we're showing the green line on top. That means that buyers are in control and sellers are really going away, but this could also be taken as a pretty extreme positive reading. We continue to advance with the summation index based on price and volume for the S&P. We're also advancing with the summation index for the NYSE, both based on price and volume. We're turning down just a little bit with the Swenlin trading oscillator based on price and volume. Sometimes this is a leading indicator for us, but we're not really seeing any confirmation of that based on price yet. We just want to be aware of this. And the PMO continues to be extreme positive, but it is positive for right now. We're continuing to go up based on price and volume. We're extreme based on price. We're not quite to an extreme reading based on volume. We're no longer extreme with the PMOs that are rising. We're coming down slightly with the buy signals, but we're still extreme positive with the PMOs above zero. We continue to be positive when we look at the Elder's Impulse system for the S&P. We're also positive with the parabolic SAR because the dots are underneath. The slope oscillator is now crossing back above its moving average and starting to go back up, but when we're above this green line, that's an extreme positive reading. The MACD is also turning back up. You could make a case that we're looking rather extreme here, but there's other times when we've gone up even higher. So when we take all of our oscillators, we're looking positive but overextended in the short term. Our intermediate term oscillators are now positive again, but you could make a case that they're getting extreme. We're turning back up with the tricks, and we're starting to cross back above the moving average with the KST. So for the most part, if the KST follows through, we would be back to full-blown positive with our oscillators. We're still above all of the plotted moving averages in our moving average tree. We're getting extreme here with the bullish percent index. We could go higher than this, but we want to be aware of that. We could even chop around up here for a while. When it's going to be an official sell signal is when we end up dropping below 70. We continue to advance with the NYSE bullish percent index. That's still looking good. And we're getting very extreme with the NASDAQ 100 bullish percent index. The Sean trend meter is just a little bit above the blue line. That's extreme positive. The Chaikin oscillator is extreme positive. The money flow actually turned down just a little bit, but it's still above 50. The ultimate oscillator is continuing to go back up and is looking extreme positive. The vortex has the green line going up. That's positive. The percent B indicator, we've now spent 3 days outside of the upper Bollinger Band. We tend to not stay very long. Will we see the lines coming up or price come down or a combination of the two to get this indicator back from being extreme positive? We're still extreme when we look at the RSI 14 and 9. On balance volume came down a little bit, but is still above an advancing moving average. We're still extreme with the rate of change going back 50 periods. We came down just a little bit with our 200 period moving average study for the stocks in the S&P. We also declined a little bit with those looking at the 50 period moving average study. We're wondering, is this going to be some kind of a problem here? Are we going to top out and then start to come down, or will we be able to break through these previous resistance levels on both charts? I don't really have anything there. We're far above away all of our trend lines for right now. So really, we can just look at trend charts with the Heikin Ashi still looking more positive, as is the Kegi, the Renko, and the 3-line break. And then we're getting a little bit lower here with our 150 and 200 period moving average study, but we're still extreme positive in the long term. And we're still above this weekly chart here with the trend line going back to the 1987 crash. The longer we can stay above this, the more positive that would be. And we're coming right up to the trend line with the NASDAQ 100 as this is finally coming back and showing a little bit of life lately. Looking at our indexes, we are seeing the equal weight starting to perform much better. That shows more broad market participation. And we're seeing the ratio. It came down after Thursday, but it ticked back up since the mega caps outperformed on Friday. And we're really breaking out with the Dow. We're showing some improvement now with the transports, and we declined with the utilities. The transports are still underperforming the Dow. We want to see that flip if possible, but the Dow is still looking good. It ended up being up slightly in Friday's session. The diamonds continue to be positive for the Elders Impulse system, and we're still battling around this R1 level for the NASDAQ. We closed just about on that resistance point. And we're also dealing with this R1 level currently now for the NASDAQ 100. But we continue to be positive on a trending basis for the QQQs. We're switching back on a momentum basis and looking positive with the PPO when measured on the NASDAQ 100. And we also broke out and closed just a little bit above this previous all-time high. So that's always a positive thing when you've got indexes setting all-time highs. The small caps, they gave some back, but it was an inside day where we had the high, low, and close within the bar of Thursday. So is this just a short-term pullback, or are we going to see some more weakness here? With the Russell 2000 small caps, we are coming down, but still extreme with the RSI. We came down just a little bit below this resistance level. We want to keep an eye on that one. We are still positive on a momentum basis. We continue to be negative on a trending basis. And we're still positive when we look at the Elders Impulse system for the small caps. The mid caps gave something back, but we're still above this R2 level. The mid caps are still positive when looking at the Elders Impulse system. The financial sector also saw a little bit of profit taking, pulled back, but is showing much improvement lately. The micro caps also pulled back about 0.5%, but we're still above the 112 level. The FANG index was up 0.75%, so that's still looking good, and that's more the mega caps. And we're coming back and setting new all-time highs with the FANG index. When we look at discretionary and compare it to staples, we tick down just a little bit, but we are showing some improvement here when we look at the ratio between the two. This is more of the growth versus value area. We want to see this really going up and then eventually feed over into the S&P. That would really help things turn more positive. The dollar ended up bouncing back up after it had been declining and is still in a longer-term uptrend. We were pretty much unchanged with the 10-year based on the yield and also unchanged based on price. And we're still out of whack here. When we take the 1-month yield, subtract the 3-month yield, we're still getting a positive result. We should be getting a negative result. And then an update here. We're still pegged to the top with our 10-day average of the S&P highs minus the lows. We've been camped out here for over a week. We're also looking more positive with the highs minus the lows and taking a 5-period moving average and looking at the broad market. This is just showing more improvement across the board. And we're showing more improvement with our new highs, new lows study for the S&P. That continues to advance. We had gone up to a pretty extreme reading with the indicator itself, and we dropped back a little bit in Friday's session, but we're still above the moving average. So that's why the red line continues to go up. We're falling a little bit here with rates, so that's giving support to the S&P. We're also declining with our staples to S&P 500 ratio. That also gives support to the S&P. So what's our outlook for Monday? We're wondering, are we going to start switching into holiday mode? You've got different places that are starting to think more about Christmas than they are in the markets, and that might end up seeing some kind of a decrease in volume. Then earnings as they are released. Our technicals are still positive, and we're still in an overbought condition, and we might be in an overbought condition for a while, but we have been breaking out of a range. We will get the NAHB Housing Market Index will be coming out. That's the only report in Monday's session. And then, of course, we want to keep an eye on all the different geopolitical events. They can quite often have an impact. Here's the economic calendar for the upcoming week. There's a lot of important reports coming out, but probably the big one is going to be the other inflation report coming out on Friday. Then seasonally, we're looking at December 18th. We're now at the week after options expiration, where we're up 64.3% of the time. We're down 35.7% of the time. So there's more of a positive flare to the week overall. We're neutral to negative with the Dow, where we're neutral to positive with the S&P and NASDAQ for December 18th. And we're wondering, is this January effect going to continue? We'll be watching the small caps in particular, as well as the mid caps. And we'll be on the 12th trading day of the month, where we do see some positive seasonality during a pre-election year. And we're coming more into the latter part of this calendar now, according to Carson, where we tend to see more positive seasonality going into the end of the year. On Monday will be the most positive day of the week in 2023. We're also looking more positive seasonally with this chart, the next chart, the chart after this, even though I updated it. I was able to find a more recent version. And when we compare election years with non-election years, we do tend to see more favorable seasonality, but we might see some weakness right at the end of the year. And now we think we're beyond this downward part of the Carson chart where we see more positive reaction going into the end of the year. Also, not really sticking to what this chart was doing as far as going down, but now it is also showing more positive seasonality. Also looking more positive with the Stock Traders Almanac for the NASDAQ, as well as the S&P 500. This was a newer chart. We're wondering, okay, for those of you that were around in 1982, we came out of a very high inflationary environment. There was a change in president. That's when Ronald Reagan became president. Actually, it was 1981, but he was elected in 1980. But so far, we're seeing some kind of similarities here, where inflation was finally under control, and then we saw a lot of strength going forward. Is that going to be what we're seeing now? There's a lot of suggestions that things could remain positive from a demographic scale. Also, you've got a lot of people that are really negative on the market. That tends to be more positive overall. So we'll just have to see how this ends up playing out, and I'll show this from time to time. So our scenarios, not going with the down one right now. There's really no evidence for that other than we're overbought. So we're still leaning towards the positive side, but be aware, we are overbought, but we have been breaking out of a range. We also want to keep in mind this possibility of a blow off tops at some point. Doesn't mean it's going to happen right away, but when everybody just starts throwing money into the market and they just are more afraid of being left behind than they are making good investments, that quite often is a blow off top. We're still concerned too, because our trend indicators are suggesting that we're extreme positive right now. So the warning signs, growth, it showed a little bit of an improvement on Friday, but it has not been participating, at least very much. The copy curve is negative, but another day or two, and this could actually cross over positive. We're still dealing with longer-term downtrends when we look at the Russell, the small caps, and the mid caps. A whole long list of positive things right now, with the daily special K chart being positive, the equity put call ratio, and I was able to look at those charts again, but I didn't add them. That's interesting. It's going down again. Just kind of take my word for that one. And the equity put call ratio based on 253 periods is also going down. The risk on posture is showing more improvement. Our oscillators are turning back more positive. The parabolic SAR and vortex are positive. The bullish percent index, it is positive, but it's getting extreme positive. The Zohorchak method, we haven't seen any changes there. It continues to be neutral. Small and mid-cap growth, we want to see more positive upward movement from that, but more or less chopping sideways as well. The financial sector is still hanging in there, and our longer-term new highs, new lows study for the S&P continues to be positive. So our conclusion, we're positive, but we're still overbought. We are breaking out, and we want to be aware of a possible blow-off top. In the short term, that's what we're really watching for. Intermediate term, we are extreme positive, and we're somewhat extreme positive in the long term with our moving average studies that we look at. Thank you. I hope you have a really good weekend. I will be doing the weekly video, the intermarket analysis video, and the deep dive video. So have a great, great weekend, and I will talk to you in the next video.